If you're a high-earning W-2 employee and you think your taxes are simple, this is the year that this assumption gets even more expensive for you, because the IRS is not just auditing millionaires anymore. They're using automation, data matching, and reporting systems that now see almost everything you do financially. And that means more letters, more notices, and more people paying money they did not actually owe, simply because the data did not line up. Over the last 12 months, we've helped over 250 high-earning W-2 employees earning over $500,000 a year legally save over $12 million in taxes just in the past 12 months. And here's what we've seen firsthand. Many of those clients came to us after receiving IRS notices, not because they were evading taxes, but because the IRS systems flagged a mismatch, a forgotten 1099 form, a crypto trading reported incorrectly, a side gig that made a few extra $1,000. These were smart professionals, but the system did not care, because 2026, the IRS is not asking questions, it's scanning data. And if the numbers don't match up, the system sends a letter. So in this video, I'm going to break down exactly why the IRS is tightening the net in 2026 and what they're actually scanning behind the scenes, and why even a few small mistakes can trigger a notice. Most importantly, I'll show you how to protect yourself before any letter arrives, and how smart tax strategy does not just reduce your tax bill, it keeps you off the IRS's radar in the first place. Let's start with what the IRS can actually see now and why that changes everything for W-2 earners. Most W-2 earners still assume their taxes are simple, but the truth is that simplicity is an illusion. The IRS now has massive cross-platform visibility. It's not just W-2s and 1099s anymore. They're pulling data from banks, brokerages, crypto platforms, payroll systems, payment apps, and integrating all of it automatically. AI-powered systems are scanning that data in real time, matching what you file to what they actually have. And that means enforcement in 2026 won't be random. It'll be automated, and almost every high-earning taxpayer is at risk of being flagged. Let's break down exactly what they're scanning. First, your W-2 and your employer data. Salary, bonuses, deferred comp, benefits, all reported, all matched. Secondly, all your side income. Your 1099 NEC, 1099 miscellaneous from freelance work, side coaching or consulting you do, even small transactions through PayPal or Venmo, Stripe, it's all being tracked. Third, your investment accounts. Brokerages, file 1099Bs, 1099 dividends. If your return does not match the report, it's flagged. Cryptocurrency. Both centralized and decentralized platforms are reporting now. Trade gains, staking rewards, the IRS sees it all. Fifth, real estate, rental income, depreciation through the cost segregation study, gains from a sale. Every number is getting examined. And finally, your bank activity. Deposits and transactions that don't match your reported income can trigger a mismatch. Even something as small as forgetting $2,000 from a side hustle, a mismatch cost basis, or one crypto trade reported wrong can cause the system to flag you. And when that happens, you don't get a phone call, you get a letter. This is not about being in trouble, it's about being in alignment. Because 2026, your IRS file is having a conversation with every financial platform you're using. So here's the truth. Most notices are not about criminal activity. They're simply about mismatches. The IRS systems are built to flag discrepancies, not to investigate your intent. So even if you did not do anything wrong, you can still get a notice, and when that happens, most people make it worse. They respond emotionally, they panic, they admit fault before understanding the actual issue. They provide more information than necessary, and all of that can cost you, even if you were technically in the right. So let's talk about what those letters actually look like and how to handle them. Letter number 1 is a mismatch notice. This one says, we found income reported that does not match your return. Please confirm. It does not mean you're in trouble. It means the data did not align. Letter number 2 is underreported income. This is common with crypto or side hustle gigs. It's the IRS saying, we think you made more than what you actually reported. Letter number 3 is adjusted tax assessment. The IRS can run your return through their system and it spits out a new number. If you don't respond, that new number becomes the actual bill. Understanding the letter you get is your first step. Not panicking, not overreacting, just reading it carefully and responding strategically. You're probably wondering, how do I stay protected? Well, here's how. First, get organized. Keep your W-2s, 1099s, bank records, crypto statements, receipts in one location. Secondly, know what's taxable. Side gigs, investment gains, crypto profits, your rental income, it all actually matters. And finally, document everything. Keep your receipts, invoices, mileage, hours worked, logs, etc. Why? Because clean records make you a hard target. The IRS does not want to fight you. They want easy wins. And documentation protects your money. Now, let's shift into the part most people overlook. Tax strategies that protect and save you money. So far, we've talked about how the IRS sees more than ever before. Why mismatches trigger letters, and how even small oversights like a side hustle you forgot to report or a mismatch crypto trade can lead to a very expensive piece of mail. But here's the key. The best way to protect yourself is not just being reactive, it's being strategic. Because when you implement smart legal tax strategies proactively, you're not just lowering your bill, you're reducing the chance of ever being flagged in the first place. And here's why. These legal tax strategies create clean, intentional tax positions. They document your deductions before the IRS even asks, and they allow you to legally reduce your reported income, the very thing the IRS algorithms scan for. So now, let me walk you through the most popular and powerful strategies we've used with over 250 high-income earning W-2 employee clients of ours to help them save over $12 million in taxes just in the past 12 months. These strategies protect your money, reduce your audit risk, and build real long-term wealth at the same time. Strategy number 1, use an HSA as a stealth investment account. Contribute pre-tax, grow that money tax-free, withdraw tax-free for qualified medical expenses, and you can stack your receipts, reimburse yourself years later. Strategy number 2 is start a simple side business. Consulting, content creation, coaching, anything legit. Deduct business expenses. W-2 earners cannot. Your laptop, your phone, software, travel, additional education. And as a bonus, use Section 162 to reinvest your money pre-tax. Strategy 3, backdoor Roth IRA. Get money into a Roth. Even if you earn too much, you could do a backdoor Roth conversion. All future growth is 100% tax-free, and it's great for long-term compounding and legacy planning. And these 3 alone can help you protect your income, reduce your risk, and grow wealth tax-free. But they're just the beginning. On this channel, I break down all the strategies in even more detail, plus dozens of other legal tax strategies high-income W-2 earners can use to A, cut your tax bill by 5 to 6 figures, B, protect your income from overexposure, and C, actually build real long-term wealth using the tax code the way it was written. If you want to access all of that and to stay ahead of the IRS's growing enforcement in 2026 and beyond, hit the subscribe button below. It costs you nothing, but it could help you save tens of thousands of dollars in this year alone. And now let's get real for a second. The bottom line is data sharing is increasing. Platforms are reporting by default. Crypto and digital income are now fully visible. And 2026 compliant rules are making everything more aggressive. This is not coming. It's already here. And pretending your taxes are simple is how you're going to get burned. So prepare now. Do not react later. And if you're a high earning W-2 employee making over $300,000 a year and you want to build real long-term wealth using legal tax strategies, so you stop overpaying like most W-2 earners and instead stay prepared, protected, and proactive, then book a free tax strategy call with me and my team using the top link in the description. We'll walk you through your income, your goals, and show you exactly how to put the right strategies in place step by step so you can keep more of what you earn and you finally feel in control. And if you're not quite ready for that, no problem. Watch this video on your screen next. If you are these 4 types of taxpayers, you're overpaying without even knowing it. It'll help you spot the mistakes most people don't realize they're making before they cost you another year of unnecessary overpaid taxes. We'll see you there.